And myself Vaibhav. In today's session of Market Movers, we will analyze the Dow Jones Industrial Average recent price action in range-bound manner, closer to 28,000 zone, where it is increasingly looking like it has been in a overbought territory, and a correction looks pretty much due. So we will see if there are any emerging opportunities for us to get involved for any trading proposition. If we consider the trading context for the day, earlier in the day we got CPI numbers, the inflation rate for the United Kingdom, Euro area, and then also for the Canada. And here for the Euro area we got the final reading. This is the final reading for the month of July, and there is no revision for the inflation rate now. The CPI has been confirmed at 0.4%. It is as per the estimates. And in terms of month on month, the reading stands in a deflationary territory at minus 0.4%. Moving on to the Canada, here also there is a decline, and for the Canada, the inflation rate stands at 0.1% in terms of year on year, and minus 0.1% in terms of month on month. Later on, we will get the EIS crude oil inventory data, and here I think the recent trajectory of experiencing drawdown in the inventory buildup is likely to continue for this week as well. And as per the preliminary estimates, we are likely to see the inventory drawdown of around 2.7 million barrels, which will be on top of the prior drawdown of 4.5 million barrel in the last week, and this will help in stabilization of the crude oil prices, which has been hovering close to US $42 per barrel in recent weeks. In all important development, we will keeping a close watch on the FOMC's monetary policy meeting minutes scheduled to be released later in the day. Given the deadlock in the fiscal package, I think most of the market participants will be keenly watching for any change in the language, or for any idea or clue on the policy stance of the Federal Reserve in these meeting minutes to be released. And if we see the backdrop of this meeting, then the coronavirus cases in the US were still rising. So, given that backdrop, I think Fed will reiterate its earlier stance of standing ready to do whatever it takes to keep the economy going, and try to bring down the unemployment rate. Now let's move on to the technical outlook. Here we will first cover the Dow Jones Industrial Average, and then we will move on to the Euro JPY. Let's start with the Dow Jones Industrial Average technical outlook first. This is the daily time frame chart, and this rally we started around 18,000, has run up almost more than 50 percentage point, and this GAN angle, as you can see, is pointing toward the same fact. Earlier the rebound was fairly sharp, and then as the days progressed, we saw the pace of rebound somewhat declining, but the trajectory is the same. And here, as you can see, the march has been unabated, though at a slower rate. And after getting this closer to prior swing high and even crossing above that, for almost a week now, the Dow Jones Industrial Average has traded in a range-bound manner around this 28,000 zone, and that has made it increasingly likely that we might experience some correction in the Dow Jones Industrial Average if there is no fresh break above 28,000 zone in the Dow Jones Industrial Average. Its other major peers, Nasdaq and the S&P 500, have gone on to touch fresh record highs. Only in yesterday's session, the S&P 500 recorded a fresh all-time high, and Nasdaq has been trading almost 15 percentage point above the prior all-time high. So, from if we were to compare this index to other its major peers, it is likely that in due course of time, even the Dow Jones Industrial Average will go on to touch the all-time highs above 29,000 zone. But I think that day is somewhat away, and we might experience some correction before that happens. Of course, we have to watch out the key levels here. And for us on the higher side, these second resistance of this month's pivot point series is of high importance unless and until there is a break above these crucial levels, above this immediate swing high. We can continue to look for short selling opportunities in the Dow Jones Industrial Average. And as you can see here, the consolidation has been quite prolonged for almost a week now, more than a week now. And as I said, we can continue to target for short selling opportunity closer to this higher side around 28,000 zone. And of course, the regression curve is still bent on the higher side, and as the price action has now shifted to the lower band of this regression curve, we might expect some flattening in coming session. But as of now, things are pretty much pointed in the bullish trajectory. Coming to the hourly chart, we have this confluence of 50, 100 and 200 SMAs in the price band of 2700 and oh, pardon me, 27,700 to 27,900. So in this price band, the price action has concentrated, and in today's session, the price action has been in a very narrow range. And I feel that this range bound matter, this price action, which has given us two clear distinct levels to watch out for. On the higher side, we can continue to target this 28,000 zone, and if and when we get any short selling opportunity closer to this price band, I would say that we should go for it. And as I said, while exploring the 4 hourly chart, stop loss little about 28,100 should be good enough. So here, target for sell trades closer to this immediate swing high anywhere around 27,900 to 28,000 should be a good price range to look for short selling opportunities, with the target being on the lower side at least around 27,650 to even beyond that. If we get clear break below this immediate support zone of 200 SMA, then I think that will accelerate the downfall of the Dow Jones Industrial Average, and it might even go on to touch the levels close to 27,500. But we are not targeting that price zone, that price level just right now. Rather than that, I would say that we should take scalping kind of trading opportunities here, and see if we can go for any trading opportunity while keeping the stop losses sharp and the target prices also equally sharp. If we see the risk reward ratio, it's not going to be exactly 1 is to 2, just little above 1 is to 1, and that's because the nature of the price action has been such that the range has been pretty narrow, and because of that we have to adapt the different approach here for the Dow Jones Industrial Average. Now let's move on to the Euro JPY's technical outlook. This is the daily time frame chart, and the Euro JPY has been holding well above this 61.8% Fibonacci expansion of its rally which started below 115 and now has gone on to cross above 125. For last couple of sessions, the Euro JPY has been in a correction phase, and it has corrected somewhat after making a high pretty close to 127 zone, and now here it is now trading almost 100 pips lower from its recent swing high. But still, the trajectory remains strong for the Euro JPY from the longer term perspective. But now, as we have seen already, these substantial rally on the higher side, I think we can continue to look for some scalping kind of opportunities in the Euro JPY as well. And moving on to the 4 hourly chart, we have these First resistance of this month's pivot point series around 126.6, and even the regression curve is flattening to some extent as the price action has now gone in a consolidation phase, and after rallying from the levels below 124.5 to almost 127, it has shown some corrective bias, and as you can see from this chart here, the price action has traded in a range bound manner starting from this last week after making the high, immediate swing high around 126.75, and from there onwards the bias has tilted to the short sell side, and now we will have to use the lower time frame chart only if we are going to look for profitable scalping opportunities here. We have to keep in mind that still now the price action is in the bullish bracket of this pivot point series. We have this Euro JPY trading above central pivot point and just tad below this first resistance of the pivot point. So the underlying momentum is still on the bullish side, but as I said, we are not really looking for big trades here. Rather than that, we are trying to look for short sale trades with scalping being our priority area. So from that perspective, we indeed have this formation of lower highs and lower lows, and even in today's session earlier in the day, we saw Euro JPY making a high closer to 126, and then from there on, it corrected almost 50 pips to make a low closer to 120.5, and now from those levels it is rebounding again, but on the higher side I feel that unless and until there is a crucial break above this immediate swing high area around this 100 SMA as well as this upper band of the downward sloping price channel, we can indeed look for sell trade opportunities, and as I said, it should be pretty close to this 126 price band, and on the higher side the price zone around 126.5 should be good enough. So for a risk of around 50 pips, we can target around 100 pips on the lower side, and that will indeed give us risk reward ratio of 1 is to 2. So here, continue to look for this price action in your US trading session, and if you are fortunate enough to get a fresh entry anywhere close to this 100 SMA band after due consolidation, at least couple of hours of consolidation should be there, and then as I feel we can expect the Euro GPY to start declining toward this prior swing low and even beyond that, and our immediate target will be 125 zone, so that will bring us the risk reward ratio of 1 is to 2 as well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.